Well, hello, Mavericks. This is Rob Reinhold, and here we are. We're going to be meeting about the British pound. We're going to get into how it works, how it was formed. We're going to talk about the central bank. We're going to talk about some of the correlations of the pound. And then we're really going to just end up with, okay, how do you exactly trade the pound? First, let's get into the economy. Now, if you can take a look at the map here, Ireland is on this map, but Ireland is not part of the United Kingdom. Ireland is actually part of the euro. So when we talk about the UK economy, it's not with Ireland. It is England, Scotland, Wales, and Northern Ireland. That is the block that we're talking about. In the late 90s, the UK decided that they wanted to join the Eurozone. However, they weren't going to join it as a full member. They say, hey, look, we want to get all the good stuff, but we still want to keep our sovereignty. We want to still keep our currency. We still want to keep our central bank. And so the UK sort of joined in with the Eurozone, where basically they shared a lot of the travel privileges, where people could travel to the Eurozone without showing a passport. A lot of the tariffs went away, and a lot of the importing and exporting of goods didn't have to go through any customs. So it was a lot freer trade. In 2016, the UK voted to leave the EU, and it took a full 5 years, and it was a messy, messy divorce. Super messy. And now the UK is now totally separate from the euro. So now we're back to a more sovereign country where they are totally separate from everything else. Now, the UK economy is the sixth largest economy in the world, constituting 3.3% of the world's GDP. And when you take a look at the population of the UK, it's much less than 3.3% of the world population. So they are carrying more of their share of world GDP growth. Now, the UK economy is a fairly balanced economy where they import about as much as they export. Their top import is gems and precious metals. Now, London is considered the precious metals center of the world, where they have the London Metals Exchange, the LME, and if anyone is serious about trading metals, trading gold, silver, platinum, all that stuff, it all goes through London. And so their biggest imports are right along those lines of gems and precious metals. Second biggest import, machinery and computers. And third is fuel and minerals. The UK does not produce a lot of oil and gas, so they need to import a lot of that. Now, their top exports, look at that, same one, precious metals. So lots of business going into and out of the UK economy. Also, the UK economy does have a lot of mining, especially in Wales, where mining is a real big part of their economic drive. Next, aircraft engine parts, and then motor vehicles. Lots of motor vehicles being produced out of the UK. So when we take a look at the UK itself, total population of 67.2 million. Okay, so when you take a look at this in relation like with the United States, this is roughly about a fifth of the United States population. But as you can see here on the left, when you take a look at GDP, nice GDP, not a ton of growth lately. Imports and exports are really about the same. That's why I said earlier, it's a really nicely balanced economy where they have about as many imports as exports that are going out. And we take a look at his debt to GDP ratio, it is at 85%. Now look, this is always a number that is shocking. And I always have my mom and some of my neighbors call me up and say, Rob, the US, we're in too much debt. Our debt to GDP is at 95%. I'm like, hey, look, as long as we're not the worst house on the block, we're fine. And 85% is actually quite low when you take a look at all the other countries around the world and their debt to GDP ratio. So let's really get into the pound and see exactly how it all works. Let's go through some currency facts about the pound. It is the oldest currency in existence. When you get into financial history, and I know you're thinking, who would get into financial history? Well, I'm raising my hand, me, super interested in it. I highly recommend a book called Panics, Manias, and Crashes. It's a fantastic book on the history. It goes through the tulip craze in the Netherlands that broke their economy. And it goes through English financial history. And there were booms and busts, back and forth and back and forth. And the first time I read that book was in 2002. And then I read it again in 2008. When the financial economy was collapsing around the world, I read that book. And it kind of soothed me to say, oh, things have all crashed and fallen apart before. They all recovered, and we're going to be just fine. So we have the pound with $2.2 trillion in money supply, and only about 5% of that is actually in physical currency. That's one of the lowest percentages of countries of physical currency, right around 5%. Now, in relation, the US dollar is $80 trillion of money supply. So you can see that the US is by far the biggest producer of currency, and that's why it is the world's reserve currency, because there is a lot of it out there. Now, that was changed after World War I, when the pound in the UK went through World War I and almost went bankrupt. They basically spent and spent and spent and spent and borrowed. And at the end of World War I, there was not a lot of confidence in England's economy. And so the US actually stepped in, filled that role, and is now the reserve currency in the world. But for probably 400 to 500 years before that, England and the UK was the reserve currency. They were the main economy and the drivers of the world. The first time I started trading currencies, all of a sudden I heard the word cable. Are you going to trade cable? What's cable doing right now? And I thought to myself, what in the world is this cable? So let's go through cable. The reason that the pound is referred to as a cable was that back in the late 1800s, they laid a transatlantic cable, a telecommunication line, on the bottom of the seafloor. And that was the first time that New York and London could talk to each other. And they were connected to New York to London. And they were able to send messages through this underwater line. And so when somebody wanted to know what the price was of something in England or the price of the pound, they would simply yell out, "What's the price on the cable?" And the person running the machine, they would get that and they'd tell it back to them. So that's why we call the pound cable. It's basically back to the old days when literally to get a quote on the pound, you had to send a signal across a cable under the water across the ocean. So just a little interesting fact about the pound. I know that I found that very interesting. Central bank for the pound is the Bank of England. Now, the Bank of England was an independent bank back in the 1600s. And after England was defeated by France, they were in a lot of debt and they needed to raise money in order to build up their army to try to go attack again. The government wasn't in any position to borrow money, so they actually partnered up with the Bank of England into one unit, and they actually then were strong enough to start to borrow some money. So this is the oldest central bank by far. They've been doing this for a very, very long time. Now, the Bank of England has lots of branches to it, but the one that we're really considered with, the one that we're really concerned about is the MPC, or the Monetary Policy Committee. This is the group that decides all the monetary policy for the UK. There are 14 members on the MPC, and all are appointed by the Crown. Now, pretty much everything else in the UK is voted on in a democracy or appointed, but this one is still appointed by the Crown. Now, the MPC has 9 voting members, so out of those 14 members, they decide which one of the 9 are going to have voting terms, and they have a dual mandate: full employment and price stability. So when we take a look at, okay, what's the Bank of England going to do in certain situations, we have to keep in mind that they are trying to accomplish 2 things: full employment and price stability, fighting inflation. That really changes how things work in the currency market when you have a dual mandate. When you're trading the pound, you're going to have lots of economic reports come out. Let's talk about some of the more notable ones. Quarterly GDP reports are going to be very important. You're going to get a monthly employment report called the Claimant Count Change, the CCC. Basically, how many people have claimed that they no longer have a job. That's basically what the report is going to be saying. And typically that comes out the 3rd week of every month. You're going to have inflation numbers, CCI and PPI, retail sales, and the manufacturing PMI report. These are going to be the major economic reports when trading the pound. One of the things to keep in mind are the correlations when trading the pound. Remember, in the forex world, there's spider webs tied to everything. When one asset class moves, it pulls everything along with it and changes the values of those. So let's talk about some of those correlations. The first correlation I want to talk about is the pound and the euro correlation. The pound has about a 70% positive correlation with the euro. All right, let's go ahead and check that out on a chart. Here we have the pound dollar, and I'm looking at all the way back to 2017 to current 2022. And just for fun, I'm going to change this to a line chart so we can really compare it here. I'm going to hit this compare button, and I'm going to compare it to the euro dollar. And all that's going to do is going to add the euro dollar onto the chart on top of the pound dollar. You can see that these are really highly correlated. When one goes up, typically the other goes up. When one goes down, the other goes down. Look, it's not exact. There's a period here where they were very uncorrelated. The pound was actually much stronger and the euro was weak. But then you can see here, the euro leveled off and the pound just fell and fell and fell. They rose together and now they're falling together. So about 70% of the time, you're going to see a really high positive correlation between the pound and the euro. So whenever you're trading the pound, you have to know what the euro is doing. Is the euro reaching a major support level? Has the euro broke a major resistance level? All of that is going to cause the pound to move along with it. The pound is about 90% positively correlated with the Singapore dollar. Now, look, this makes sense. Singapore was part of the UK for a very, very long time and hasn't changed until fairly recent history. So let's take a look at those correlations. So we have the pound here. I'm going to simply add in the Singapore dollar, US dollar cross. Now you can see that there were some periods of time where it was highly correlated, sometimes not as highly correlated. But there were periods, especially this one in here, they were like 95% correlated. 95% correlated in here. You can see every so often, one of them will get away from the other. Now, looking at this, you can tell one thing. The British pound is more volatile than the Singapore dollar. That's the one thing you can tell because as we swing up and down, you can see the swings in the pound on a percentage basis are much bigger than the swings in the Singapore dollar. Again, this is something to just file away in your brain that the Singapore dollar is much less volatile than the pound, even though they are highly correlated together. And the pound is about 60 to 70% correlated to the SPX, and actually only 40% correlated to the Euro Stoxx 50. Now this one was a fairly interesting one, and depending on the time frame that you looked at, there were some time frames over the past 20 years where the pound was more correlated to the Euro Stoxx 50 index. But overall, there was actually more correlation to the pound, to the SPX, than to the Euro Stoxx. Let's take a look at that correlation. First, let me add in the Stoxx 50. I'm going to add it at a new price scale. And I'm also going to be taking a look at the SPX. I'll put that at a new price scale as well. Let's take a look first at just the SPX. So this is the SPX since 2017. You can see as the SPX is rising, the pound is rising. As it leveled off, the pound actually fell. You can see lots of choppiness around COVID, but really high correlation here. And now we're getting a pretty high correlation as the market is coming down. Let's take a look at it against the Stoxx 50. And you can see at this period of time, I would have to say that the Stoxx 50 looks a little bit more correlated. You'd have to run the data to really see how correlated it was. But if you go back in time, you'll see that there are some pretty low levels of correlation among the Stoxx 50 and the pound, where the SPX was actually a little bit better when you compared them together. So when you are trading the pound, understand that the SPX is actually a driving force behind the value of the pound. As you can see, it is positively correlated to equity market returns. So that makes the pound a risk-on currency. It makes a currency that people want to buy when times are good and sell when times are bad. That's something to file away in your brain and remember as well. The most traded pairs when you're looking at the pound, pound dollar. Pound dollar is by far the biggest one. But let's talk about pound yen. Pound yen is considered the most volatile currency cross. I've heard this for well over a decade, and it's one of those things you hear and you say, well, someone else has done all the work, so surely they've done all the work and I can just trust them. Before this session, I actually went out and tried to find the research behind it. What is the actual research? Is this belief actually true? Unfortunately, I was not able to find any real credible study or anyone who'd really gone into depth about it. I'm not saying that it's not right. The pound yen is a very volatile currency cross, but I think it might seem more volatile because the pound yen is priced somewhere historically between 120 and 220. And so when you're watching a 220 exchange rate, so again, the pound to yen exchange rate was 220 to 1. When there's a big move, it's going to look like a bigger move. Oh my gosh, a 10% move. That is, so big in pips. When you take a look at pound yen, when you take a look at something like Kiwi yen that's trading at 70 cents or 70 to the dollar to the yen, all of a sudden those moves don't look as big on an absolute basis, but they look big on a percentage basis. And so I can't say that this is definitively true. But what I can say is if it's not one of the most volatile currencies, I would be very, very surprised. Euro pound is also a deeply traded one, but let's talk about this one. This one is going to be highly correlated. There is no reason to trade this on a regular basis. The only time I ever trade this currency cross is when there is some real serious negative correlations going on, and then I'll look to trade it. But this is one I do not trade all that often. Pound Swiss franc. Look, Swiss franc and euro are highly correlated, so that means that pound and Swiss franc are going to be highly correlated as well. Don't trade that one much. However, over here, pound CAD, pound Aussie, pound Kiwi, these ones are actually tradable for sure. We can trade these a lot, and they do like to move on a pip basis. They're going to move much larger than like euro pound. Let's talk about when to be long. We took a look at the correlations and see that the pound is a risk-on currency. Now look, it is not the most correlated with the SPX. The most correlated with the SPX is actually the Aussie. The Aussie is the strongest correlation to equities. So do you want to buy the pound against the Aussie in a rising S&P? No, that's the wrong play. But you want to play it against the negatively correlated currencies like the dollar, the yen, and the Swiss franc. You want to trade during election periods. Now look, this simply means volatility. There have been a lot of big moves, and one of the biggest trades I made in my life in forex was during Brexit. And I remember taking a trade, looking at the risk reward, and I said, look, the pound has made a big run into Brexit. I think I have about 150 pips of risk. And I think I have 500-600 pips of downside. I was wrong. I had over 1,000 pips of downside. That was the biggest trade as far as pips go that I've ever made was short pound dollar. Actually, I was short pound yen. And it tumbled from like 144 down to like 132. It was a crazy, crazy move. Also around their elections, there tends to be a lot of good movement and volatility. So you definitely want to pay attention during those times. Whenever you see increased volatility in metals trading, what that means is there's more money going through the economy. There's more money being sent to the UK. There's more people wanting to get into the exchanges. So to trade on the exchange, you've got to trade that exchange in pounds. So that means there's likely going to be an increase of demand for the pound. And whenever the UK is showing much stronger numbers, especially when you take a look at like the euro and the Swiss franc. So let's say the euro and Swiss franc are actually like only growing at 1% a year. But then you take a look over at the pound and the UK economy is growing at something like 4% a year. That's going to be a nice little differential for you to take advantage of on the long side. Let's talk about times to be short pound. All right, when the S&P is falling, you want to be short pound against the risk-off currencies. So just like you want it to be long pound against these currencies, you want to be short against these currencies. But look, it doesn't make a whole lot of sense to be short, pound Aussie when the market's going down, because that Aussie is also going to be falling along with the market as well. During election periods, look, volatility, it doesn't care about direction. Volatility simply means there's big movements. We always like to trade during big movements. Whenever you see metals trading lower in volume, I remember back in, the late 2000s, gold and silver were really just out of favor. Really hadn't moved for anywhere in a while, and there's really no people that wanted to be in that market. That's going to be negatively affecting the pound. And then whenever the UK is struggling, they had some economic struggles after Brexit. Their economy slowed down. That also hurt their currency quite a bit. So hopefully this helps you on how to trade the pound. And that is part of our World Currency series. Thank you for joining me. Goodbye.